Such a big week for the dollar. We have PPI tomorrow, CPI on Thursday. In this video, I'm going to cover what that means for you, where dollar is heading next, and my current GBPUSD short position that I literally just entered. Stay tuned in the video. What is going on, everyone? Welcome back. What a crucial time for the dollar. Dollar is at a key point for me right now, and I thought I'd make this video to remind everyone the current narrative and what you have to keep in mind when trading this right now. So, Fed member Mester just announced that, yes, you know what? The US will not go into a recession. The fundamentals are looking great. Everything's fine. Guess what? It's not, right? In terms of face value, things might look okay now. Employment might be firm now. What does that do for us? That just tells us the Federal Reserve have ammunition to carry on raising interest rates. We know tomorrow we have PPIs, which are scheduled at 1:30 UK time, and then on Thursday, the big CPI number, which is what we're all waiting for. It honestly is a key turning factor for us, and we're going to run through that shortly on the charts to run through what that could mean for dollar and where dollar is going to be heading next. So for myself, I remain a dollar bull. That is not changing. The Federal Reserve have not changed stance. There is no sign of a pivot, so I don't see why we should be short. Any little dip that we have in price as seen today, we have to capitalize on. Like for myself, floating roughly around 4,000 right now. I'm not sure if you can see that. I'll take a screenshot. You know, it's not about what it is, it's about where it is, right? I want to capitalize on this dollar strength. It is just a case of where and what we actually trade in. So for myself, I know notoriously in these markets, especially in these conditions, it can often come across early. You may be early on your bias, you may be early on your trade, but it is important to constantly remind yourself of the narrative, and I'm here to do that today. So we're going to run through dollar. This current sell-off that we've had right now is simply the expectation of inflation coming out lower. That happened the last print, right? And I'm going to run through that shortly. Join me on the charts, and I hope you guys enjoy. Cool. Dollar right now, as you guys know, is my forefront for everything I do. Everything I do, dollar is the key. So we've had a bit of a dip today. All this does for me is lines up dollar crosses for short-in opportunities. We know this, right? So the current dip in price, let me show you on the economic calendar, is simply the market's anticipating, and I'll show you this on Thursday. Give me a second. There we go, this week. There we go, Wednesday. There we go. On Thursday, we are expecting inflation to come out at 8.1%. Right? That's spot 2% lower than previous. This may signal to the markets that the inflation has peaked, that the Federal Reserve may slow down. For myself, I don't see that happening. You had OPEC, right? Reduce the supply by 2 million barrels a day on oil. This is going to send energy markets higher. This is going to send inflation higher, right? So I personally don't think inflation has peaked. I personally still expect double-digit inflation for the US. We've seen it in Europe. We've seen it in the UK. It's about time the US catch up. So looking at dollar overall, what does this tell me? This tells me that I remain a dollar bull. It is simply a case of where we remain dollar bulls from. I mentioned this in my live London session this morning. The fact that dollar has had this rally the past 1, 2, 3, 4, today being the 5th day, right, without any correction, should send some alarm bells ringing. So I pretty much called this reversal this morning, you know, just to remind yourself that we are dollar bulls, but it's where we dollar bulls from. So for myself today, my short position on cable right now, I actually broke this down this morning. I had this area of interest, right? Looking at that on the 30-minute time frame, we came straight into a key area of interest, and I'll actually show you the position now. I'll put a screenshot over here. Right, flowing about 5K in profit. Let me screenshot that right now. Flowing about 5K in profit, and there again, I'm trying to let this focus. Beautiful little short position over there. Right, I've put my stops briefly above the high, right? So it's not a bad trade at all. So I'm going to hold this one, more than likely take some risk off the table overnight for a peaceful sleep. We know what that means, having risk exposed overnight. You're constantly going to be looking at your phone, constantly thinking about it. I know you do that too. So more than likely take some money off the table, roll my stops, and then it's a free trade, right? Why I love doing that is because the market constantly presents opportunities to us. If we have those opportunities, we want to use it to our advantage. So that's how I've pretty much, so the drop on the dollar does not scare me. All it simply does is line up my crosses for a short. The euro had this rally, Aussie rally, cable rally into an area of interest. I like that area of interest. I want to capitalize on it. That's what it's about, guys and girls. It's about maintaining composure despite irrational moves that we've seen today. Let's jump straight into the economic calendar and run through what's expected. So tomorrow we have PPIs. In case you didn't know what PPIs are, that is producer price index. There we go. And that is inflation to the producer. If inflation to the producer continues to rise, what's that going to do to the cost of their goods and services? It's going to continue to rise too. So that's expected at 7.3 of this. I'm not really too worried about that. My main focus is definitely the FOMC meeting minutes that we have tomorrow and Thursday. On the FOMC meeting tomorrow, they're just going to reiterate, their stance going forward. They're going to reiterate that their job and their mandate is to control inflation. We know this. In case you didn't know, the Federal Reserve have two jobs known as their dual mandate. Job number one is to ensure maximum employment, which is what the US have right now. We had a fairly strong jobs print on Friday, non-farm payroll, right? The unemployment rate firmly at 3.5%. That's the first tick done, out the way. Second job is price stability. Think about it this way. If inflation's calm, if prices are stable, people will continue to spend in an ordinary manner. The economy will continue to revolve around that. Spending is so crucial. How are people going to spend if they still have jobs? Keep that one in mind. So Thursday's inflation reading, super important. I want to just break those two apart. If we have inflation higher, the dollar's going to continue its relentless rally higher too, right? If inflation does dip as expected, dollar is going to suffer a hit. And I want everyone on this video right now and watching this to be prepared for it either way. If dollar goes higher, that's because inflation came out high. If inflation comes out lower, dollar is going to suffer a hit, and I want us to technically be ready for that. If inflation does dip in as expected, so lower than previous, we may see along the lines of a push lower, anything into back to 111, right? If inflation continues to soar higher, dollar is going to continue in its relentless rally, and I see us making new highs, breaking 115. You may be thinking, Marco, you're telling me that it's either going to go up or down. That's what I'm doing here. I'm not here predicting the future. I am simply trying to match the probabilities of what could happen, how we're going to capitalize on it together, and then matching that with the probabilities overall. So if you look at something like cable, right? For a second, if I just forget my current trade, right? Because it's not about where we want the market to go, it's about where it's actually going. Keep that one in mind. So if we were to have a push up higher on cable, it just gives us a better risk reward to short. That means you're a fader. It means you're fading that strength in something else. So don't see it as a bad thing, see it as a good thing, right? So despite what happens this week, I remain a dollar bull. The narrative has not changed. The only time I would change that is if the Fed announce a pivot, if the Fed announce a slowdown. Several Fed members have already announced that they can't afford, right? They can't afford to slow down. They're not going to be looking at cutting rates in 2023 either. That's what the dot plot is showing us. So, are we entering a regime of high interest rates? Possibly, right? Possibly. So for myself, either way, I'm short on everything, right? I'm short on everything. Gold, right? We came into a key area of interest shortly, like a few minutes ago, right? Beautiful little reversal out of the high. Same sort of move as we saw on cable. Right, you're using that dollar weakness to capitalize on this. So all it's doing is giving you risk rewards. So constantly look for that and constantly remind yourself of the current narrative. So keep that one in mind, guys and girls. The Federal Reserve has two jobs, equally so, known as their dual mandate. One, maximum employment. Second, price stability. So stable inflation. Inflation's far from stable, so that means they have one of their dual mandate that needs some attention, and that is why they're raising interest rates as they are right now. So keep that one in mind. I remain a dollar bull. It is just where I'm a dollar bull from, and I hope you are too. Hope you enjoyed this video. Do like, comment, share, subscribe, and obviously I'll see you on the next video. Take care. Bye-bye.